folks, today I'm going to give you some more hot ETFs on the horizon to add to your trading toolbox. Now, over the past few months, the market's been showing increased uncertainty, partly due to the upcoming unforeseeability over the presidential election and the COVID-19 pandemic that's been taking the world by storm. That's why I'm focused on assets that should rise in different types of market cycles and offer you portfolio strong diversification, especially during volatile market periods that are surely to make up a big chunk of the remainder of 2020 and almost certainly dominate 2021 and possibly beyond. The influx of capital coming into the market, coupled with no clear timeline for COVID-19 vaccine, is sure to keep short-term volatility elevated, which in turn will cause the overall market to remain fragmented. In times like these, I often recommend defensive trading action, such as ETFs, or mutual funds, which expose your portfolio to several stocks at a time, or conversely, take advantage of trading strategies that are not dependent on the overall direction of the market. And that's what I want to talk to you about today, especially this first one here. This is brand new, folks. This is like hot out of the oven. Global X Nasdaq 100 covered call and growth ETF, ticker symbol QYLG. Get this. This ETF follows a covered call or a buy right strategy. This Nasdaq 100 covered call launched in August of 2020. It's brand new. It's been trading for less than 2 months. As a result, it's only got about 4 million in net assets, so it's got plenty of upside. This ETF literally just started trading in August, but it's extremely interesting and it's showing a lot of popularity already. As part of the unique strategy, fund managers first buy all the stocks in the Nasdaq 100, then they write at-the-money index calls on about half of the value of the portfolio, such that an approach captures about 50% of any upside potential of the index, but also achieves additional income through the premium received from writing options. Index options have several characteristics that make them different from single stock options. For example, index options, they can't be called early. Only when the index finishes the expiry month is relevant for the investor. The choppiness and monthly price swings do not really matter all that much. Finally, since index options are settled in cash, there would not be a delivery of the underlying index holding. Just want to make sure there would be no delivery. QYLG, as the ticker symbol is, may be an alternative for market participants who want the yields offered by covered call premiums as well as participation in the upside potential of the index. What could be better? And it's Nasdaq 100. One of the main advantages of this ETF is reliance on covered option premium, which is an amazing strategy during choppy but volatile markets or periods when markets are consolidating. Therefore, and that happens about 70% of the time. Therefore, it's a perfect asset to invest after the market makes a big move, since markets alternate between horizontal and vertical trends for the most part. So far, the asset's moving in the right direction, and I highly encourage you to take a close look at it as well. My second choice comes in as a Direxion Work From Home ETF, ticker symbol WFH. I love this one, but it's a directional asset. Look, the stay-at-home environment may be with us for quite some time. Therefore, you should get familiar with the stocks in this ETF, whether you invest in this ETF as a whole or at some of the constituents. The global number of COVID cases has passed 35 million. Nations embrace the second wave of pandemic as one of the most important consequences of COVID has been the shift towards the stay-at-home environment. This ETF, which launched in June of 2020, it's a brand new ETF, provides exposure to companies that are likely to benefit from the flexibility work-and-home environment. WFH, as the ticker symbol reads, which tracks the Solace Remote Work Index, concentrate on companies in cloud technologies, cybersecurity, online projects, document management, and remote communication. I think I covered it all. The index consists of 40 companies, 10 from each industry that I just mentioned. About 94 are from the USA. Top 10 holdings make up about 30%. Get this: Twilio, Insego, CrowdStrike, Zoom, all right? Elastic, all head the list. These are all prime stay-at-home stocks. I highly, highly recommend you take a look at this ETF. It's a gold mine. And if you're looking for hot stay-at-home stock ideas, just click on the constituents and you'll see which ones are part of it, and those are really good stocks. Hope that helps. Folks, there's been a major flash crash in the markets just as recently as September. It's not surprising that most traders are hurting after losing money and are trying to find a solution. Luckily, I've seen this market activity before, and I know exactly how to take advantage of these crazy market levels. I'm finally revealing how these flash crashes often traders big opportunities. If you need help navigating and trading this volatile market, I urge you to click the link below. See how you could earn 92.5% on your account in less than 4 weeks. Actually, technically, 10 trading sessions. You don't want to miss it. Matter of fact, last 10 trading sessions, we did 125.29% on FedEx. Can you imagine that? 10 trading sessions. Learn how. Don't miss out. Talk soon.